All right, welcome back. So if you've noticed that your auto insurance payments have increased this year, you're right. And according to Bankrate.com, the average cost of car insurance rose more than $2,500 in 2024. That's an increase of 26% over last year. Dan Kiesel is the director of insurance for AAA Hoosier Motor Club. He joins us now for our unfiltered conversation. Dan, good to see you. What are some of the reasons behind this?
Well, that 25% is pretty accurate here in Indiana, too. And, many people have been calling here wondering what it is. And, most often, surprisingly, it's nothing they did. It's just a sign of the times. It's inflation. It's the labor rates are up to fix cars. And if you need to replace parts or buy a new or used car altogether, they're just more expensive.
So what are you recommending to folks who give you a call?
Well, there's certain things that are within their control and certain things that are not, focusing on what you can't control. One of the most important things I would recommend is to maintain your insurance. Don't drop it. You get the same identical people and they're both shopping for insurance. One has it and the other one doesn't. The other one's going to pay at least 50% more, and we deal a lot with that. People calling in that just let their insurance expire. Certainly leverage all the discounts. Listen to your agent. That your agents, if they they know where the discounts are, whether it's bundling, and that's all over every insurance commercial you've ever heard. But leverage the discounts and how you pay. If you buy in bulk, and everyone likes to do that, if you can buy an annual policy versus a 6-month policy, that'll be better for you. And if you can pay it all at once versus monthly, that's good too. And pay from your checking account. That's better than like a recurring credit card, because those bank fees that the credit card companies charge are greater than like from your checking account. So how you pay is a big one. Of course, bundling.
Are you surprised that it's up that much, 25%, Dan?
Phil, these come in cycles in our industry. It's every 8 or 10 years. This one has gone on a little longer than usual, but the pandemic was anything but usual, right? So we still got a hangover from that, and that's impacting some things. People are working remotely, and maybe they don't want to go back and work in a garage. So labor rates go up. So nothing surprises me anymore. It's just a sign of the times, and it's insurance, and unfortunately, like inflation, things tend to go up.
Okay, so they go up and down. Any idea as to when these rates might start going down? A little positive? Leave you off with a little bit of a positive
I am optimistic.
Yeah.
As I work with the customers and our agents, I'm always optimistic. We don't know, however. One of the carriers I was speaking to earlier this week, they gave us some tea leaves that there could be some relief with them in the next couple months, and that was certainly good news to us. But each of the individual carriers, they work in within their own, so they individually make the determination as to whether rates go up, go down, or stay flat.
Yeah. Final thought before we let you go, Dan.
The final thought would be, as you shop, and it's not a bad idea to shop, but I would definitely call your agent, and do not compromise your coverage. People that just, want to reduce their, especially auto insurance or bodily injury limits, the difference between the state minimums, that'll barely protect you if you're being sued for causing injury to someone, and limits, 6 times that, like up to $300,000. The difference annually is about $70. And if someone's suing you, you're going to want that $300,000 of coverage versus, say, just $50,000 for, if you cause serious injury to somebody. So listen to your agent, but don't compromise on your coverage.
Yeah. All good stuff. Dan, always good to see you. Thanks for coming on.
Thank you, Phil. Have a great day.